Hi folks, you're with Tacitus today, your pushback channel, and thank you for joining this live stream. In this essay, I'd like to talk about how big finance, how the big players on the stock exchange, how they influence and pretty much control most of not only corporate America, but the corporations in the Western world. Now, so some people have said to me, well, if these the BlackRocks and so on, and the other players at that in that space, if they only control say 40% of a company's stock or voting shares, how can they have such oversized influence? And it's a good question, so I'll try and address that now. The Most of the, say, boards of directors, CEOs, and the upper or most senior levels of management, VPs, executive VPs, and so on, they're on various performance or bonus systems. So, say they get, I don't know, $1 or $2, $3 million a year, or whatever, as a salary, they get a big bonus component that if the share price hits a certain level or has a certain average over amount of time. So if that share price threshold is achieved or surpassed, then they get a big bonus. And some of these bonuses are huge. The salary may be, for example, $3 million, but if the threshold is reached, the bonus may be, say, $10 million. So it's a huge top up of their income if these share price thresholds are met. Now, the way it's supposed to work is that because the company's performing so well, the share price goes up, and therefore, if a CEO of the senior management team has done such a good job to get the company that is doing so well, then they should be rewarded. And I by the way, I agree wholeheartedly with that. If you've got a bright, hardworking, experienced management team who bust their ass and they do a great job of building up the company's business, increasing the amount of customers and increasing profitability, all this sort of stuff, then they deserve to be rewarded. Goodness me, why not? But that's not what's happening here. The way it works is these companies and the financial firms are in bed together. So these financial firms, by and large, control the price that the stock is traded at on the stock exchange. This idea that it's smaller independent players that are buying the shares because the company's doing well or selling because the company's doing badly, that simply doesn't happen. That's very yesterday. That the price is controlled by these small players, and they can do all sorts of front running and placing phantom orders and so on. So, and if you look at some of the stocks, they can double in price as the volume of trade is falling by 50%. So the way it works is more buyers come into or the way it used to work is more buyers come into the marketplace, the share marketplace, and they like a stock because the company's doing well. They come in as buyers and they just force the price up because there's so many buyers keen to want to buy it. But we've got a phenomenon today where the amount of buyers are disappearing. They're vaporizing, but the price still doubles. So that's clearly a scam. And the Securities and Exchange Commission in pretty much every Western country has chosen to look the other way. So they're obviously it's a globalist international policy. So what happens is then the financial firms come to the management and they say, okay, well, look, why don't you set your bonus threshold at $50 a share, for example, and the shares are currently trading at 30, and the CEO says, well, gee whiz, I don't think we're going to really do that much better. I think things will improve a little bit, but it's no way is that going to improve in the next few months. Nothing like that. You let us worry about that, says the big financial firm. We'll take care of the share price. Well, yeah, but I'm sure you need a very large study to be conducted, or a report or review or something like that, and that the bill for that is $25 million, and could you sign off on that? Now, let's have a look at your bonus, Mr. CEO. Well, why don't we say that the share price reaches $50, you get a bonus of $10 million. but it's not going to get to 50. You let us worry about the $50 share price. You just put you just write it up. You get the board to approve it. It's all legal. It's legal. Put it out there, and shareholders can vote on it. Oh, shareholders don't vote. We'll take care of that. Most shareholders don't vote, and we've got 40% of the voting stock, so we'll make sure they get a majority, and don't you worry about that. So it'll all pass, and make sure that the executive VPs and so on get their bonuses as well. Look after all the people you need to, and we'll take care of the rest. And magically, the price goes up to fucking $51. Gee, isn't that incredible? Just as the bonus date is to be triggered, $51, and then the company makes an announcement about what the next quarter or next half year is going to look like, and the price just slowly drifts down on minor trade volume, and so that's it. Now this is the power these guys have to fix share prices. They can take the share price up and down to whatever they want, and they do, and so this is the point that triggers these big bonuses for the executives. Now, the executives say, "You get out of here, you low-life assholes. I'm not going to sell out for something like this." Now, it could work both ways. At the same time as they're discussing the bonus. Remember, these financial firms have a lot of clout. There's the CEO gets a call that very exclusive school or college or university that he wants his kid to get into, that really got a 20-year waiting list. There's just no chance he's going to get in there. Suddenly he gets a call saying, "Look, I think we've found a spot for your daughter to get into this very prestigious college." I mean, even if she's a dunce, the mere fact she's been there is enough to open many doors around town. So we can get her in there. Look, we're looking for we're putting up a new wing for the basketball courts. Could you, we're wondering if you could maybe just help us out here, and we'd be very grateful, and so on. And so suddenly that $10 million bonus, that's going to be enough to get the daughter into this college and get the basketball wing done, and so on. And I think we can help out with that. The CEO tells the college dean. And so they're isn't this incredible that you call just at this time, just as we're talking about rigging this scam bullshit bonus? So these are the sort of things that go on, and this is how the CEOs go down. This CEO's already doing very nice. He's already got a nice place. He's already got a lot of money. His golden parachute for retirement's enough that he doesn't have to work again if he doesn't want to. But if you want to have the waterfront, prime waterfront, best address house mansion in the Florida Keys with your $10 million cruiser and your in the water and your private Learjet and so on, you need a certain threshold of money. You have to entertain at a certain level. It's expensive. So these bonuses come in handy, and they're obviously susceptible to it. So just doing well, doing okay, it's not enough. You have to be doing really well. I mean, be really, really, really liquid to do what you want when you want. And so these bonuses play that part. So this is how it's done. Now they can scam the bonuses in all sorts of ways, whether it's a share price or something else. Say they need a certain level of new market penetration, then they'll hire that very same financial firm to do a special report on the market penetration, and they'll come up with, the market's been penetrated to such and such an extent that triggers your gazillion-dollar bonus, and then the very grateful CEO pays a shitload of money to the financial firm or one of their subsidiaries to reward them for doing this bullshit report. So that's how the game is played, and that's why there's outsized influence from the big end of town in regard to controlling or influencing, if not controlling, the big financial firms. Also, the big financial firms have got a very slick lobbying machine. And I knew a politician that made a speech that was even vaguely disparaging of one of the financial firms. And before he got back from the Parliament, He had to wait for a couple of debates or speeches to finish. So within say an hour and a half of him making that speech in the Parliament, it was an hour and a half before he got back into his office. When he got back into his office, representatives from that financial firm he disparaged were already in his office. What do we have to do? How can we fix this? What do you need? What do you want? That's how slick these guys are, and they're like that, pretty much all over the world. And don't sell them short. To get a machine that's that slick, that's prompt, that bang, they hear a word somewhere or a reference, and they're on the case. That's pretty good. You've got to congratulate them for being that good, and they're good. So this is the level of influence and control they have. So if a company wants to get into an area where the government needs to change its legislation, a big firm, and they can go to these financial heavyweights and say, look, can you lobby, the chairman of this committee or that committee to get a vote this or that way, so we can have a monopoly here or an oligopoly there. We don't have to worry about having to compete or something like that, and then they'll get easy, lazy money coming in the door just through influencing a lawmaker to legislate in a particular direction. And the lobbying machine kicks into action, and the politician's very well looked after, and in turn the company shows its gratitude in other ways. And they could be that maybe they're going to hire some people into very prestigious roles, maybe some mistresses of the financial heavyweights or relatives or whatever. All these things go. I've had one guy in a big financial firm was saying that he would only agree. This is obviously how business is done. He would agree to help a firm out provided his son was given a very prestigious, important job. No job for my son, I don't help you. So these are sort of things that go on and how it's done. Which, by the way, this has always happened in the West, but not to this extent. It's just everywhere now, and it's turning the entire Western world economies into a banana republic. You've been with Tacitus today, your Pushback channel. Thank you for listening.